Good morning, everyone. We will start the morning call. Asian markets are mixed this morning, ranging between a positive 0.5% and negative 0.5%. SGX Nifty is flat. So Asia is soft basically because US markets were down around 0.5% yesterday. After hopes of Federal Reserve softening its hawkish stance faded because of strong US jobs data that came yesterday. Today, later in the day, the US Fed will announce its decision, and it is expected to increase rates by 75 basis points, which will be the fourth consecutive increase of this magnitude. In other news, crude oil rose around 2.5% and is now at $98. This is because of speculations that China will be reopening, so there is strength over here. I will now hand the call to the technical team.
Excellent. Thank you, Jehan. Good morning, all of you. This is Swati. Yes, from the last few trading sessions, we are witnessing that the Nifty is moving ahead on a northward direction as such, and as Nifty is well placed above 18,100 level on the closing basis, which gives a positive indication. Today, the market is likely to open on a positive note, and this pullback rally is likely to be continued towards 18,200 to 18,300 levels on the higher side. So that will be the first targets for the Nifty. Whereas on the downside, the immediate support is placed at 18,100. If Nifty manages to close above that level, then we might witness some sort of a profit booking, which might take a Nifty back towards to 18,000 to 17,900 levels. So as of now, the view is definitely positive on the Nifty as long as it's maintain the mentioned support levels. Coming towards the Bank Nifty, yesterday we have seen that the Bank Nifty had just quoted a intraday high at around 41,800, but somehow it faced selling pressure at the day from the day's high, and just we have seen a Nifty, Bank Nifty has just maintained a low of 41,330 levels, which gives some sort of a cautious sign as of now, because Nifty is very well placed at the higher levels, but the Bank Nifty is facing a selling pressure at the higher levels at such, which gives some sort of a cautious sign. If Bank Nifty goes below 41,300 level, then we are likely to witness some profit booking into the Bank Nifty. Which might take a Bank Nifty towards 41,000 levels, and any move above that level, we are expecting 40,800 levels on the downside. On the flip side, 41,600 will be the first resistance zone for the today intraday basis. Any move above that level, 41,800, 42,000 levels can be seen shortly. Coming towards the Nifty Finance Services, for today intraday purpose, as of now, the support is placed at 18,530. Below that level, 18,400 levels can be seen, whereas on high side, 18,700, 18,080 are the crucial resistance level for the Nifty Finance. Coming towards the stock specific, yesterday, as of now, the chemical fertilizers stocks are really doing very well. One can look for the RCF. Currently, we are looking for a target of 114. One can take a buy call at CMP. Stop loss can be kept at 99 for a target of 114. That's it from my end. I request derivative guys to take a call forward.
Yeah, hi, good morning, all of you. This is Ayush. I'll be covering the derivative part for today. So, okay, Nirav, you can start then. Sorry.
Yeah. Sorry for that. There's some issue with the Zoom. On the derivatives part, looking at the overall positions, looks like we are still slated for further buying in Nifty and Bank Nifty. We are seeing a very important trend here for Nifty. See, open interest is less. Nifty is every day taking up about 100 odd points on the upside, and the open interest amongst its options that is shifting. So from 17,500 to 18,000, the highest put base shifted upwards. Now once we are above the 18,200 levels, you are seeing that 17,500 put, which had the highest put base, that has shifted to 18,000. Similarly, for the call base, where 18,000 at the highest call base, that has shifted to 18,500. So all in all, this is a positive development. Also, PCR is not very high. Still at comfortable levels. The VIX continues to remain around the 15-16 levels. So all of that together tells us that very likely we are going to see this continuation of the trend, and Nifty is likely to test 18,500 going forward, which is a good sign according to me. So remain positive, buy on dips. That should be the strategy going forward. From the stock specific front, banks did very well. Yesterday, banks continued to perform like HDFC Bank, Kotak. The ones which did not perform that much have now picked up. Also, very importantly, as we had said during the rollovers, IT and FMCG, IT and pharma are the sectors which are likely to perform in the first few days, and that is what we are seeing, good performance from the IT sector as a whole. There are some stocks which haven't moved up, like Tech Mahindra. These stocks should move up quite considerably, and I believe one should look out for the same. Even in the pharma sector, Oro Pharma, DVs, and the others like Dr. Reddy, which were in consolidation for quite some time. Even Zydus Life, these stocks can move up quite considerably. So look to buy these stocks. You can get a good 5-10% return on the upside from these stocks. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Yeah. On the results front, Cholamandalam Investment and Finance, the NBFC company, result is below expectation because of lower NIM and higher OPEX. But also there were some positives. Loan book grew by 25% year-on-year and 7% quarter-on-quarter, now at 87,000 crores. Disbursements also grew 10% sequentially. And if we look at the split up of disbursement, the new business of digital lending to SMEs is now already contributing 21% to total disbursements, which is commendable, as this started barely 6-7 quarters back. Asset quality is improving slowly, and on the negative side, NIM came at 7.6% versus sequentially 8%, as all banks have started increasing their lending rates, and there could be further pressure coming in future. OPEX also grew by 14% quarter-on-quarter and 28% year-on-year, and this led to a pre-provisioning profit declining by 2% quarter-on-quarter. For long-term investors, in case the stock corrects, it can be a good opportunity to accumulate, as the underlying growth is back, and scale up of digital lending also makes us bullish. Geojit financial result has improved. Revenue grew 10%, profits by 8% sequentially. Broking revenue grew 8%, and distribution grew well at 23% sequentially. So overall numbers look decent. So we are positive. LIC Housing Finance result is below expectation because of steep decline in net interest margin, which came at 1.8% versus sequentially 2.5% and year-on-year 2%. So it's a big decline, and loan growth remains lackluster at just 10%. So one can avoid LIC Housing. Prudent Corporate Advisory Services, which is a distribution company, distribution of mutual funds, result has improved. Equity AUM, which is 94% of total AUM, grew by 8% quarter-on-quarter, and market share of the company has increased to 2.4% versus 2.3% in previous quarter. Revenue grew 15% sequentially, higher than AUM growth of 8%, and also EBITDA grew by 30%. So good set of numbers. Stock is trading at 26 times Q2 annualized earnings, and stock can do well. So we are positive on here. Karnataka Bank result has improved due to provision write back, which led to good beat on profits. NPA also declined well. Net NPA came at 1.7% versus sequentially 2.2%. Also slippage declined from 3+ to around 2% this quarter. Stock is also available cheap at just 0.4 times trailing price to adjusted book. So after good result, valuation is also cheap, and stock can perform well in the short term also. So we are positive on Karnataka Bank. PNB result is marginally below expectation because mainly because of credit cost, which remains elevated at 2.5%, and also on ROA front, if we see, it is one of the lowest among all PSU banks at just 0.1%. So one can avoid the PNB. Thank you.
Good morning, everyone. Tech Mahindra posted its result yesterday, and the company has posted broadly in line set of numbers for the quarter, with TCV coming in at $716 million. CCQQ growth came in at 2.9%, supported by communication vertical has grown by 3.1%, and enterprise grew by 2.8%. EBIT margin came in at 11.4% versus QQ of 11%. On demand front, management doesn't see any kind of weakness yet. However, indicates there could be reprioritization in spend. The company had guided for exit EBIT margin rate of 14% for Q4 FY23, for which management indicates there are different levers like higher utilization, on-site offshore mix, low subcontracting cost, etc. Outlook is neutral on the company. CMS Infosystem posted its result yesterday, and the company has posted improved set of numbers for the quarter, with revenue growth coming in at 4% QOQ and 26.8% year-on-year. Growth in revenue was supported by both growth in the CMS and the managed service business. EBIT margins also improved and came in at 28.4% versus QOQ of 27.3%. We are positive on the company. Stock is trading at 13.8 times FY24 EPS. Thank you.
Yeah, good morning. Tata Steel had its con call yesterday, wherein the management indicated that the company utilized its higher cost of inventory of coking coal, which impacted EBITDA margins during the quarter. Realization during the quarter was also declining, and the management has further indicated a decline of around 800 rupees in Q3, as the auto contracts negotiation for first half were concluded in October. Inflation rate high dynamics and Russia-Ukraine crisis, along with higher energy cost, impacted Tata Steel Europe margins. Management has indicated a reduction of about $80 per ton and $100 per ton reduction in coking coal cost for Q3. Iron ore cost will also come down by $15 per ton in Europe. Management expects steel prices to remain range bound and strong demand recovery from auto and infra, which will aid margin expansion in the second half for India business. However, margins in Europe are expected to sharply decline in the second half, mainly due to a rise in energy prices. The company commissioned its 6 million ton pellet plant in Kalinganagar, which will commission in Q3 and help company to save costs. Going forward, the company's focus will be on organic growth, and the management indicate that it can grow to 25 million ton in its Kalinganagar, NINL and Bhushan steel plant. However, what we are seeing now is the coking coal cost has again shot up to $350 per ton, as against $250 per ton last month. So the impact of this will be seen in Q4. So we are neutral on this company. Apart from this, Coal India reported its offtake numbers for October month, which came in at 52.9 million ton, up by 8% month on month and 6% year on year. This is positive for the company. NMDC iron ore sales for October month came in at 3.09 million ton, up by 6%, however down by 14% year on year. This is neutral for the company. Thank you.
Good morning. So yesterday, auto companies announced their monthly sales. Automobile sales in October were largely in line with the expectations, as passenger vehicles witnessed strong dispatches to dealerships, while two-wheelers continue to struggle. While car maker sales jumped significantly compared to the low base last year, the month-on-month comparison showed a declining trend. The evident point of stress for automakers were exports, which dragged the companies relying heavily on the overseas market. The muted performance of two-wheeler makers such as Bajaj Auto and TVS Motor can be partly blamed on the lower shipments to these foreign markets. The tractor sales, however, defied expectations with growth and dispatches for both Escorts, Kubota, and Mahindra and Mahindra. The expectation was that the tractor sales would fall compared to last year. In the CV sector, overall volumes declined by 8% month on month due to double-digit decline in volume posted by Ashok Leyland and SML Isuzu. Overall, CV volume across major OEMs remained flattish. MHCV bus sales continue to witness demand tailwinds driven by strong demand pickup from states, educational institutions, and offices. Uh, MHCVs will continue to be healthy on the back of replacement demand kicking in and higher freight availability. In LCVs, we see demand further improving, led by vehicle availability amid an improving chip situation. On the result front, JK Tyre announced its result. The revenue has improved. Revenue came in at 33 crores. 3,757 crores, which grew by 3% sequentially and 26% on a YOY basis. EBITDA margin came in at 7.9%, which was flat, 7.8% sequentially and 9.8% on a YOY basis. Raw materials and other input costs witnessed an ongoing uptrend, thus impacting margins. The company has taken multiple price revisions, though not to the full extent, and will pursue further opportunities. During the quarter, original equipment manufacturers' offtake improved post easing in semiconductor supplies, festive season, and good traction in economic activities. The stock is trading at a PE of 9.3 times FY24 EPS. Thank you.
Good morning. The Dhanuka Agritech Limited reported result which is above expectations. There was reasonable growth observed in revenue during the quarter, which is at rupees 543 crore, with a sequential growth of 38.2% and YOY growth of 23.7% versus the expectations of 484 crore. EBITDA margin stood at 18% versus expectations of 17%. The margins during the quarter lowered due to high raw material prices, which were not passed on to the consumers. Besides this, rupee depreciation against dollar had an impact. After the impact of uneven rainfall on agriculture industry, the management expects Rabi sowing to be favorable backed by normal monsoon towards the later half. It expects double-digit growth in FY23 on account of good Rabi season. During the second quarter, it has launched 3 products named Cornex, Zenith, and Decide, which were well accepted by farmers. The stock is trading at PE of 15.5 times TTM EPS, and we are positive on the company with a long-term view. UPL Limited reported result is above expectations. Revenue came at rupees 12,507 crore versus the expectations of 12,060 crore. Revenue performance was largely favored by higher realizations of at 21% and exchange rate offset and also favored by the exchange rate, which were offset by the decline in volumes by 7% YOY. The EBITDA margin came at 22.1% versus the expectations of 19.5%. The stock is trading at a PE of 9.7 times to FY24 EPS, and we are positive on the stock. On the FMCG front, the FSN E-commerce Ventures Limited announced result in line with the expectations. Revenue came at 1,231 crore versus the expectations of 1,245 crore. The Nykaa is more focusing on partnerships and collaborations, and it has partnered with Estee Lauder group of companies to launch Beauty and You India. It has also partnered with Priyanka Chopra Jonas to launch Anomaly hair care brand, and with HUL to launch its new skincare brand Acne Squad. In fashion segment, it has partnered with world-renowned fashion retailer Revolve and apparel group in order to expand its reach in Gulf Cooperation Council. It has total stores of 124 stores and across 53 cities. The EBITDA margin improved for the quarter at 5% versus the expectations of 4.8%. And the stock is trading at the PE of 130 times to FY24 EPS, and we are positive on the company with a long-term view. Now I hand over the call to commodities team. Thank you.
Good morning, everyone. Today, prices are expected to rally in commodities. Gold one can enter around 50,500 to 450 levels. Prices are expected to test 50,800, 850 levels on higher end. One can maintain a stop loss below 50,350. Silver, we have witnessed breakout about this resistance zone of 58, 400 to 500. So it might test the levels and again bounce back. So buying in silver is recommended at 58, 500 with a stop loss below 57, 900. Prices could test 60,000 on higher end. Crude oil have witnessed a gap up opening, so buying on dips is recommended. One can initiate a buy around 73.30 with a stop loss below 72.50. If prices are sustaining above 7,400, we expect prices to rally further and test 75, 7,500, 75.50 on higher end. Metals too are looking good. Prices have opened gap up, but buying on dips is recommended. Copper one can initiate a buy around 658, 59 level with a stop loss below 654. Prices can test 668 levels on higher end. Zinc might test the resistance zone of 260, 262 levels, and one should be cautious at that levels. Natural gas, we have seen a gap up opening, and prices could test 490, 495 levels and might correct. So today for a day range 460 to 490 is the price movement we expect. That's it from me. I'll ask Riya to take over here.
Thank you, sir. Good morning, everyone. So on the currency front, USD INR has opened at around 82.84 in today's sessions. Like said, it is respecting the levels of 82.62 and the resistance of 83.15 until unless it gives a breakout to either of these levels. The pair will trade within the stated range. For the GBP INR, we are seeing some profit taking that is happening into the pair. It has opened with a gap down at around 95.50 levels. The support for today's session can be placed at 95.37. If the pair breaks this support, it will further decline towards 95.30. The resistance could be placed at 95.60 in the intraday session. For the JPY INR, the pair has opened at around 56.49 and is trading with the bearish momentum at 56.41. The support for the pair can be placed at 56.32. If it gives a breakdown to that, it could further test the lows of 55.92. The support for the pair is placed at 56.60. If any reversal has to happen, it should give a breakout to the level of 56.60 in the intraday session. For the Euro INR, the pair is placed, has opened at around 80 with a gap down at around 82.24. The support is at 82.04. If the pair gives a breakdown to that, it will further continue the bearish momentum towards 8180, 8170 levels in the today's session. The resistance is placed at 82.37. That's all on the currency front.